Hey guys, today we're going to talk about how to qualify for a mortgage loan. We look for three things. Number one is credit, number two is income, and number three is assets. Today we're going to specifically focus on credit. So how do we qualify based on credit? Number one is you have to have a minimum credit score, traditionally a 580 or above. Okay, so what I'm going to do right now is walk you through what it takes to have a great credit score. Okay, so number one, the top priority is make your payments on time. That accounts for about 35% of your credit scores. Believe me, it's really important you make your payments on time. Otherwise, credit scores will not be where they need to be. So 35% of your scores is based on what you can control, which is making your payment on time. Number two is proportion of balances to credit limits, right? So credit utilization. If you have a credit card of, let's say, $1,000 credit line, your goal is to keep the balance at 30% or less. So in this particular scenario, you'd want to keep your balance at $300 or less. And if you do that, you will maximize the points on that criteria. Very important, okay? The third item is length of time of which you've had credit. So when you signed up for that, credit card and you got a free t-shirt while you're in college. I remember I got one 15 years ago and I still have that credit card with a $200 credit line and I got a free t-shirt. So keep those credit cards open as long as you can possibly keep it, because that's the length of time of which you've had credit, and that's 15% of your credit scores. Super, super important. Okay. So then number four is the mix of accounts, right? So there's three types of credit accounts: revolving, installment, and mortgage. So as long as you have those three types of accounts at your credit, reporting to your credit at any given moment, you are maximizing your scores in that particular category. And last but not least, number five is new accounts, okay? So you don't want to add too many accounts too fast, right? So the moment that you have too many accounts that are opened with balances, you could lose up to 10% of your credit score. So as long as you're not out running your credit and getting new credit cards every single month, you're going to score very high on this category. All right, guys, that's it for today. Hopefully you got something out of the video today. If you did, give us a thumbs up, and don't forget, please subscribe to our channel for more awesome content on mortgages.